Welcome to the Investors Trading Academy Economic Calendar of the Week. Each week our news analysts review the upcoming economic events that you should be monitoring. This week brings both the Bank of Japan and Federal Reserve. Each of these meetings can stoke significant volatility, and if we judge based upon the reactions from last week's ECB action, liquidity will likely remain subdued as the potential for risk aversion remains high. The previous BOJ meeting turned out to be pretty disastrous. The bank made an unexpected move to negative interest rates, which, by design, should spurn capital flows out of the currency. The exact opposite happened, and massive yen strength emanated from that move to negative rates. With hindsight, it appeared that this surprise move shocked markets to the point of risk aversion. The big question is whether they'll take that risk again or whether they'll look to extend an increase in their QE program. Also, risk will come from the latest US central bank policy meeting, US political primaries, the budget, and the meeting of the Bank of England's rate setters set to figure prominently. The Fed are not expected to change their policy settings when they next meet on the 16th of March. However, there is keen interest in what the latest set of microeconomic and interest rate projections from the Fed policymakers. Likewise, her press conference after the meeting will be extremely important to gauge how the Federal Reserve's reaction function might or might not be adapting to the heightened volatility seen in the global capital markets at the start of the year. Nonetheless, and as the Fed itself has always been keen to point out, it is reactive or data dependent, to use their own words. The budget announcement on Wednesday will be another key event, with economists at Credit Suisse expecting it will deliver more aggressive fiscal consolidation in the coming years than in the autumn statement, which at the margin will likely be negative for growth in Britain. Among other considerations, the budget may well factor into the Monetary Policy Committee's deliberations and policy announcement scheduled for the next day. In the US, investors will be watching if GOP frontrunner Donald Trump succeeds in making off with his party's nomination for the presidency. A raft of US data is also set for release throughout the week, with the latest retail sales and consumer price figures on Monday and Tuesday respectively, possibly among those that might provoke the largest move in market prices. Eurozone consumer price data referencing the month of February on Thursday are expected to show the price level in the single currency area slipped at a 0.2% year-on-year pace.